Hello and welcome to another update video about Dogecoin. So Doge it's been hanging around in this support area now for a few days. To get a decent third wave rally, I really need to I need to see a bottom structure form imminently. It is an orange support area, which highlights it is higher risk of breaking. Why is it at higher risk of breaking? First of all, we've already briefly broken the 78.6 fib level at 7.33 cents. That is always higher risk in itself, because it means that this is lower reliability. Whenever you see a break of the 78.6 fib, the likelihood that this setup still works out reduces. Now, I have to tell you that this is not yet broken really. It's not a sustained break yet, but we've already broken it a few times. He's slightly always recovered, but it's just questionable still, right? However, I have to tell you that we are obviously still fighting with that 78.6 fib level, and we see something that you could call a descending wedge. Now, we talked about that in the last video already. Again, there's probably different ways of how you can draw this. You could even just draw a channel here, I guess. Yeah, wedge pattern, channel, it doesn't really matter. In the end, we need to see a breakout, and it would need to be to the upside. If it isn't, then next support will be 7 cents. But that's really the last exit on the motorway for the bulls, because if they don't take that, then we are most likely going to break below the 6.6 cent level, which is the December low, and will follow my primary path further to the downside. So as you will know, if you've been following my videos, I'm still expecting primarily one more low for Doge. Ideally, with this scenario, we're going to come down and make a low below the June low, but it is still a decent setup here that is tradable to the upside. That's why I have it on the chart, because it's an opportunity. Yeah. On the other hand, we've got a lot of other opportunities at the moment, which are, in my opinion, lower risk. But this is now deeply in support, and basically very good, if not phenomenal, reward to risk ratio, because the target here for the third wave would certainly be above 13.5 cents if it works out. However, and the risk is very low, yeah, because basically if you get to the invalidation point, well, it's not really invalidation below 7 cents of this setup, but it's like a nearly invalidation, yeah. If the 78.6 Fibonacci retracement level breaks, 90% of setups aren't going to work out, just a number from experience. And below the 88.7, I mean, it's even more, yeah. So this setup won't really be invalidated until the price breaks below 6.6 cents, but it is basically, you could say basically invalidated. Yeah, in practice it is, in theory it isn't. There's rarely certainty in financial markets, but I can tell you that the certainty is going to be that this setup is going to be invalidated below 6.6 cents. Until then, it's just probabilities. But yeah, primary expectation is anyway still down for Doge. That's why I'd be careful on the long side. I'd also be careful on the short side, because we're just in the support area. But below 6.6 cents, I think we can look at a drop into that area below 5 cents. Yeah. So unchanged view really, but it would, if it really wants to play that third wave, it needs to turn around imminently. I mean, the possibility is there, right? I mean, let's go to the 1 hour chart. We can see here on the 1 hour chart bullish divergences on the chart. So we're making lower lows on the price chart, but higher lows on the MACD and the RSI. I don't think we see a divergence on the, do we see? Yeah, we do see bullish divergences on the 4 hour chart as well. Now that doesn't mean it definitely has to turn around, but if I was to make an assessment of the sub-wave structure here, it is certainly not unlikely that this is some kind of a fifth wave. So we might have, and that's just, again, there are different possibilities because we talk about micro counting here, but this could be a wave 1, this move up a wave 2, where we peaked at 9 cents here on the 18th of Feb. Then we came down in a third wave. This might have been a fourth, and coming down now in the fifth, where we possibly saw a 1, 2, 3, 4, and we're now doing an ending diagonal. Yeah, at least it's an idea, and would also make sense, yeah, because ending diagonals occur in a wave 5. So yeah, it will be interesting to see if we see that reaction or not. I would need to see a break above 8.3 cents to really confirm a low is in with a good likelihood. Until then, downside pressure remains. And to be honest, the very first signal would actually be a break out to the upside, a break to the upside of the corrective price channel. At the moment, we are following this corrective price channel down. I mean, if you really talk about the micro level here, you see the yellow channel. A break above that would be a very first signal. Then we could probably get to the upper boundary line of the white channel, which is of the larger structure here. And if we break above that, next resistance will be 8.3 cents. And from then on, I would start to focus on higher into the 13-cent region. Okay, that's my update about Dogecoin. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.